Hello and welcome to Business Today Television. We are counting down to the Union Budget, which is going to be presented 11 a.m. on Saturday, the 1st of February. And there are multiple questions in the minds of people as to what they can expect and what is required as far as their own personal budgets are concerned. This is going to be a record occasion for Finance Minister Nirmala Sitharaman to deliver her budget, but for 1.5 billion Indians nearly, the question will be what is in it for my own personal budget. A host of questions, lots of queries and some answers that we are attempting today on this unique show, Ask Business Today. And viewers, with me, I have my colleagues, Shailender Bhatnagar, Markets Editor of Business Today, and Sakshi Batra, a senior anchor, both of who track India's markets very, very closely, and they've been doing it for years. Shail has been doing it ever since the reform started and has seen the journey of India's markets, India's economy go through many cycles. And that big debate, Shail, that people are having, is this a cyclical slowdown or is this a structural slowdown? Or Sakshi, the questions that people send, when will FIIs come back and start buying, or are they going to sell more? We have a bunch of question viewers today on Ask BT. We had invited questions from multiple people. So during this live conversation, if you have questions, please go hit the description box, the question box as far as Business Today on YouTube is concerned, and we'll try and consider them. But let's begin with some of the major questions that have come our way. And what we are going to do during this show, viewers, is that for a change, we are going to try and assume the mantle of experts. We are just journalists, and we'll try and answer these questions within the editorial confines and certain discipline that we have to follow, especially for those queries where specific questions are asked from a guidance point of view on stocks. We cannot offer you any guidance. We do not work in the space of providing any manner of tips. So if you have sent us a question to that extent, I'm sorry, we will not be able to answer, but we can definitely talk about what is going on and what is expected, especially around the news of the budget proposals and whatever is in the anticipation space. So first question that's coming up, and this is a question, Shail, Sakshi, that's perhaps a toss-up for us to answer, and the question goes, has the government introduced new tax exemptions or increased limits under 80C, 80D or Section 24B? Will this budget be for the middle class or for corporates? I think let's take the last part really. And Shail, I want to begin with you in terms of what's your anticipation. Is this a budget for the middle class or is it for corporate India?
Hello Siddharth, and thank you for having me over. It's about 18 hours left for this document to be talked about publicly. But there are three broad themes that the government will try to address. Whether it helps the middle class or corporate India, I believe it's good for all of us put together. This is how to sort of prevent this dip in consumption from extending further down. So you are going to see some impact that is going to come in, how to improve this weak domestic demand, which implies both positivity for middle class as well as corporate India. Then of course you have this global uncertainty that all of us are facing in terms of what Mr. Trump is up to, in terms of either putting in more tariffs or putting in more barriers to the world's greatest market, which is the US. And of course, finally, capital expenditure, fiscal deficit, and of course, consumption. So these are the 4 or 5 broad themes that I am looking at, and they address both the middle class as well as corporate India. Siddharth.
Okay, so Shail has given us a pretty balanced answer given the complexity of the question. But Sakshi, I am coming to you with a follow-up, and this has been sent by a user called Anabia, and the question pertains to tax saving schemes. You also had a discussion in the run up to the budget programming with some tax experts, and the question goes, will the government introduce any new tax saving schemes or offer deductions? And in fact, there are other questions that also pertain to taxes, which is very clear that the tax part of it is the biggest question. But Sakshi, what's your own sense, and what did various tax experts who appeared on our channel tell us earlier about this possibility?
Thank you so much, Siddharth, and thank you so much, Anabia, for that question. Well, yes, most of the tax experts do believe that this time also there could be some tax changes, so we should be looking forward to those. Yes, there is also an expectation that the government could spell the sunset of the old tax regime. So there are these two regimes that we are functioning with, and slowly and gradually the attempt from the government side is to make the new tax regime more appealing for more and more people to look at it, whereas slowly and gradually spell the end of old tax regime. So there is an expectation that this time there could be further indication as to when will the old tax regime finally go away, and to make more and more people look at the new tax regime as the default regime, there is a likelihood that some more measures could be brought in. So remember, last time around in the budget, the exemption was raised from 2.5 lakh rupees to 3 lakh rupees. There is an expectation that from 3 lakh rupees of an exemption, this exemption could go as high as 5 lakh rupees. At least that's the expectation that most of the tax experts have. And many feel that because the first and the priority of the government at this point in time should be to boost consumption, this by this measure, they believe more and more people will have more money in their hands, and therefore consumption could be boosted by that fact. So I believe that first up, the exemption could be risen, and apart from this, there also could be some tax changes in terms of slabs. There is an expectation that the highest tax slab that begins at 15 lakh rupees for 30% should be further pushed away to 20 lakhs. So that's the other big expectation this time around, Siddharth.
Okay, I was just going through our questions, the ones that had already come in, and roughly out of 18 questions, almost 10 relate to tax. So let's keep focusing on the tax and clear up the tax related questions. I will try and bring up those questions one by one, and I'll request my producers, colleagues to keep bringing them up on the screen. So Ather1 is one of the Insta handles, and the question that has been sent by this handle is on the stance on privatization and disinvestment. In fact, let's take that later. Before that, let me take a specific tax one. Armina asks, how does this budget affect salaried employees? I believe this would be a question that pertains to tax. Let me take another one. Naima asks, how will this budget compare to previous years in terms of tax relief? Will it be good for the middle class, or will it create gains only for corporates? There's another tax related question from Malik. He says, how will the budget impact small business owners and freelancers in terms of taxation? There are some others, but again, Shail, Sakshi, what's your sense as far as tax is concerned? Is this fundamentally a reflection of the kind of impact that we are seeing on account of inflation,
Yes.
on account of goods and services tax, as well as the fact that there hasn't been much in terms of substantial giveaways for individual salaried and other income taxpayers?
That's absolutely true, Siddharth. If you look at how this particular stance has been interpreted by the public at large, it is as follows. One, wage growth is minimal if not negative. Jobs are few and far between, and what is really hurting everyone is inflation. So you have rising expenses and of course a cap on incomes. The only way, if these two were to remain constant, would be to decrease the tax rate so that you have more income in the hands of people. If you look at private consumption, it is lower than the GDP number. It essentially means that people are unable to spend, and therefore you see that even car sales or even bike sales have yet to hit pre-COVID levels. So it is this that is most likely to be tweaked. you will have more income given in the hands of the lower middle class, so that you see an uptick both in FMCG and both in auto sales. And of course, as Sakshi mentioned, you will see a lot of tweaks happening in how income is taxed in the hands of the middle class, so that you have a lot of beneficiary impact on consumption. Look at it this way, Siddharth, 40,000 crores worth of SIP is coming into each month, right? So, what the middle class is doing, it is building up corporate India by giving it access to cheaper capital. Now, at the same time, whatever corporate India is building, the middle class is unable to buy क्योंकि पैसा ही नहीं है घर में. So, it's a conundrum that Finance Minister Nirmala Sitharaman has to address, which is, given the parameters that you have, stagnant wage growth and stagnant salary growth, plus little or no job opportunities, the only way you can do it is either tweak tax slabs, or at the lower level just offer incentives and subsidies. As we have seen in the last 3 elections, the winning scheme has been Ladli Behna, it has been handouts given to women voters and female voters, and of course, the increment in PM Kisan Yojana. So, that is the only way.
A lot of those beneficiaries of welfare programs may perhaps not even be in the tax bracket, and I am sure some of our viewers will want to respond if this was a live call-in show, that that's fair. Those who are at the sections, economic levels where they need support, they should be given support, but those who are actually paying their taxes and paying them regularly should also get a break. There are some more questions. I will quickly rattle off through them before I go to Sakshi. Dhruv Nagesh, and the question is, have there been any changes in real estate taxation or home loan deductions? Along with this, Noor has sent a question. How does this budget impact taxpayers across different income slabs? What will be the major changes in income tax announced in this budget? I wish we knew that already. Another question that has been asked by Mehrina. Have there been any changes in standard deduction or HRA exemptions? Rahul asks us a question. Will there be any changes in crypto taxation, 30% tax, 1% TDS? So, I think we have more or less exhausted our tax related questions. Let's take up the real estate taxation and the home loan deduction question at first. Sakshi, what's your sense? Boosting home ownership, especially affordable housing, has been a stated policy objective for years now. Although one can argue that post-COVID, affordable housing more or less seems to have taken a hit, and we have had ultra-luxury premium housing segment taking off. The government's own housing programs are targeted towards those who are in need of support, and perhaps this question may not pertain to them. What's your own sense about real estate taxation? Can something be expected in this budget?
Absolutely, Siddharth. I think the biggest pain point is affordability for the middle class when it comes to home ownership. The prices are still escalating when it comes to affordable housing. The scheme also hasn't had a stellar takeaway when it comes to PM Awas Yojana. We need to do some tweaks there so that more and more people are able to afford what is given. I think most experts did have a suggestion that, you know, the dimensions and the definition of affordable housing needs a tweak so that more people can afford and come under the ambit of PM AY as well. Whereas on the luxury part, of course, we are looking at all of those houses across Delhi, NCR and in Mumbai, upwards of 100 crores having sold off in just like a single day. So we do know that there is a disparity, and that needs to be addressed at this point in time. Last time around, there was a lot of hullabaloo. You would remember, Siddharth, that there was an indexation talk as far as the real estate taxation is concerned. That needs to be simplified. There is a lot of confusion still as far as real estate ownership is concerned, and that needs to be definitely taken care of. For in case the government is still looking to carry forward, probably in the new scheme when it comes to the deductions on home ownership as well as interest rates, then that needs to be tweaked as well, which is currently under Section 24B. A lot of people have also asked that. That also needs to be hiked a bit, because 2 lakh rupees does not really, pave the way for enough tax saving including when it comes to home ownership right now?
Okay, I'll take one more part of the tax bit before we move on to markets and some sectors, some interesting questions there. What's the broad philosophy that we expect? What do BT editors expect to happen? Point number one, the government, and if we look at the past 5-6 years and not go back all the way to 2014, one of the very important moments in this government's tax policy was 2019, the month of September. It was outside the budget, was when this government undertook a very major cut in the peak rate of corporate taxation. There was also a special window that was provided to greenfield fresh investments at a lower rate of tax. That has expired last year. That big corporate tax cut, the jury is out on whether it achieved its stated objectives, which is to get private sector investment back and running. COVID came in March 2020, and when we have spoken to policy makers in the past, they blame COVID for interrupting the process of large private sector greenfield investment happening in India. नए उद्योग, नई फैक्ट्रियां, नए प्रोजेक्ट नहीं लगे कोविड के कारण. And post COVID, if we take out the 2 years, then we are now seeing, even the economic survey today spoke about the fact that there are some green shoots on private sector investment. But if you look at other data, capacity utilization of existing plants and factories is still not 100% in many cases. Therefore, fresh investment has not happened. The bigger question for the government is how do they get consumption up and going in the economy, both in rural India as well as in urban India. In the last 3 years, the government has pursued the philosophy of pushing the new tax regime. Now, what is the new tax regime? Many of those who have signed up would know that the new tax regime does not provide exemptions like home loan exemptions or many of the other sections. It says very simply, we will tax you at a lower rate provided you don't ask the government for any exemptions. The government looks at exemptions as revenue foregone. It does not necessarily look at it as money in your pocket. It sees that मेरी जेब से, सरकार की जेब से पैसा ले लिया गया है. So the new tax regime is aimed towards reducing exemptions almost to zero. It will give you some extra money. Now, depending on your income slab, depending on whether you have a home loan or not, other expenses, the extent of your savings, it is hard to give one specific figure of the benefit. Case to case basis, there is some benefit. Now look at the old tax regime. If someone has taken a 20-year home loan, a 15-year home loan, a 10-year home loan, or if he has subscribed to various saving instruments which allow him to offset his tax liability, that person may not be able to suddenly switch off his home loan or his savings pattern, and savings are good both for the individual and for the economy. So the big debate is which path should this government go down? Should it continue to make only the new tax regime the preferred option, or should it incentivize the old tax regime? The signals we have picked up are pretty mixed. Various people have said various things. I believe that the government will continue to double down on the new tax regime, and perhaps Shail, I don't know if he can flip a coin on this, but it might just choose to say, well, yes, we understand we want to give you relief. You give up your exemptions, I will give you some more cash in hand, switch to the new tax regime. So I don't know what that flip of coin will be, but like Shail said, we are literally counting the hours down to the next budget. So you'll probably have to wait till 30-40 minutes into the speech to understand this issue. So tax, Shail and Sakshi, is the big question on everyone's mind. So I think axing the tax would be the best headline as far as public perception is concerned. Let's now move to markets. Yeah, Shail, go ahead.
We have about 22 questions, out of which 15 are on taxes. This goes on to show how people are fed up of paying higher GST, fed up of paying higher service tax on everything and anything. at a time when they are unable to make money from the market, they are looking at a relief from the government in terms of taxations. And what is really bothering people is that this money which they may have used to build assets is being utilized by the government to come up with schemes that do not help the middle class at all, which is you give free access to buses, free access to metros, free access to food, so on and so forth. So, this is what is ailing the middle class at this point of time, and what is more important, they are not asking about markets, which essentially is the fact that they have accepted the corruption in their face, and this just might be the right time.
But there is a question on the markets.
Yes.
Azam Elahi has asked a question, and let's try and bring that up. Shail, and this is to you as well as Sakshi, how will the budget impact stock markets and investor sentiment as it continues to be in losses and has wiped out billions of money? So, I think the question is basically what's happening in the market, the downturn and its impact. What do you...
There's one more question also on the market. That is from Mohit Yadav on our YouTube, who's watching our show live. He says, sir, LTCG or STCG kam honge kya, sir? That's the question.
अगर इस सवाल का जवाब होता तो ये जवाब हम आपको पहले ही दे चुके होते, हम इसको अपने पास नहीं रखते और हम बिल्कुल पारदर्शिता से इस प्रश्न का जवाब दे पाते.
No, see, look at how it is, how this double taxation again is impacting the retail investor. I pay STT, so the government makes money on every transaction whether I make a loss or a profit. Okay. The STT was put into place, if you remember Siddharth, many years ago. I think it was Mr. Chidambaram's time when he said, you know, it's getting difficult to collect long term capital gains tax because people don't declare it. Now, I am going to put in an STT at the source, it's minimal, right, matlab 0.005%. Therefore, it is easy to collect, brokers will deduct from you and they will give it to me, fine. Then the LTCG came back, correct. In this phase, the government strengthens its IT infrastructure so that there is less of tax leakage. Now, this is a very genuine question which the present finance minister refuses to answer. If STT was placed in place of LTCG, then why was LTCG brought back? And not only brought back, increased, also on real estate, minus indexation. So, if the middle class is angry, it has an absolute right to be angry. They keep on paying higher and higher taxation, and of course, you have stagnant income and now falling markets. It couldn't be worse than this. That's why 15 out of 22 questions are on tax.
Sakshi, come in on this. We may not be able to predict what will happen with regard to taxation, but do you have a sense from experts as to what the market direction will be, and are the markets at all going to be watching the budget fine print carefully?
I think I can say one thing very clearly, which all the market experts, including you also, Siddharth, will agree on. In case there is any further hike on LTCG or STCG, this market will punish investors even further. The recovery that we have seen in the last 5 to 6 days, remember the markets digested last time around in 6 months ago when this hike was done. This time they might just throw up in case there is a further hike. We do not have the FII support right now. It is only the retail investors' money that is coming in, and how much longer can they continue to pump in money without having to see either growth on the economy or the markets. We are underperforming the world by a large amount in terms of the kind of gains that we have seen, be it the US or the other developed markets right now. So we need to see that there is some kind of rationalization when it comes to such taxes on markets.
Shail, 700 point odd rally. Is this just a sort of short phase, or do you see that the markets have regained their footing to some extent after what has happened in the recent past? And also, what will drive our markets in the near future? Will it be Indian spending priorities, the central governments, or will it be corporate performance, results and earnings? What do you think will drive market sentiment and performance?
Well, Siddharth, first things first, in the last 4 days, the Nifty is up 3%, mid cap is up 4% and small cap is up 5%. You could just say in hindsight, which is an exact science, that the worst is behind us, but I think this is a dead cat bounce. Now what happened in the last 4 days was, one, there was this weekly, the monthly expiry was there, there is January 31st, which is also the NAV balancing day for funds, and more importantly, there was an ease in US 10-year yield. But in these 4 or 5 days alone, the foreigners have taken good benefit of the bounce that has happened to sell more. So far in the last calendar year and in January put together, they have withdrawn somewhere like $74 billion, and you can see where the rupee is. That is the pain point, because everybody is heading back to America, and at that point of time the emerging market cycle deteriorates, plus we were overvalued. So my understanding is that if we close 2025 at the same level as today, which is the Nifty at about 23,500, I would be very happy. I do not think so that is happening. 2025 will be a year of readjustment. So let us just keep that background in mind. Now I believe the budget will come up with 3 very positive data, which is capital expenditure will rise somewhere between 7 and 11% to about 11.30 lakh crores, which is a very big plus for all government PSUs, all orders that are stick in the pipeline, because in 2024 the government stopped spending. So you will have a jump start in the economy because government will start spending. Secondly, it will put in more money in the hand of farmers, it will put more money in the hands of lower and lower middle class, which means FMCG and auto stocks will do well in the coming 2-3 months. And of course, much will depend on what Mr. Trump does. If you have a 100% tariff on all Indian exports to the US, then let us look for a bond fund, let us look for a fixed deposit.
Okay, look for a bond fund or a fixed deposit. So those are pretty stark words, but there's another question.
Siddharth, just for a moment.
Yeah.
On 5th of June, I wrote somewhere that the fixed deposit, 5th of June last year, when the election results were out, that the fixed deposit might turn out to be the best investment for 2024. I had no idea it would work out so well, but now in 2025 I am mostly certain that the fixed deposit will be a best performing asset in 2025.
Okay. Sakshi, I wonder if you have a comment before we move on to a question on FDI.
Yes, one really needs to look at how we can push more FDI coming in. You were mentioning very well, Siddharth, that PLI schemes, they have worked well, and we really need to tweak them even further to get more and more industries into the ambit right there. Because I think one pain point that is being seen for this slowing economy is why manufacturing has not picked up. And you said that, new manufacturing hasn't started. So PLIs, and by way of this, if one has seen it in some of the industries, it should be further given some more wings to get more and more industries get started on newer manufacturing. That will end up creating more jobs, which is again a big ask from the youth of the country at this point in time. So far, the volunteering scheme, the internship scheme that the government also had, has not really had a major start. They're again facing problems that people who were not supposed to apply for it have applied, and they have an abundant data to really deal with, to find out who is the rightful person to really give these jobs to. So one really needs to push manufacturing. There is one more clear point, and that is the private capex cycle, which hasn't picked up. That needs to pick up at this point in time, and for that the government really needs to push up, because the jobs will only be dependent on these 2 factors.
So, this question that Shivani had asked, how does this budget impact FDI and economic growth? So, partially we have answered it, Shivani, but just to add, anything that the government of India does impacts either its spending or the amount of revenue that it proposes to collect. So, on one hand it will spend, on the other hand it will collect. As far as FDI is concerned, what do foreign investors look for? There are 2 or 3 different things that have attracted all manner of foreign investors over the past 4 decades to India. One, it is the local market for their goods. as large foreign companies in developed economies face saturated markets, they go out for growth. That's one basket of investors. So you could put a soft drink company in that, you could put a FMCG company in that, which has gone to access newer markets, and India is one of the largest markets. There has always been the debate, is the Indian middle class 400 million or is it much lesser? What is the purchasing power, buying capacity of this middle class? Let's leave that. The second class of foreign investors have come for cost arbitrage. The United States of America started outsourcing manufacturing. It started outsourcing other parts of its economy to lower cost economies like India. The IT boom in India is just one manifestation of that. So that is the second set of foreign investors who look at cost arbitrage and see the Indian operation fulfilling that. The latest evolution that we are seeing, and this is a sector that is booming in India, and this is called the Global Capability Center, GCC. Three of the most important alphabets in the Indian context. Now these are not just back offices doing low level work. GCCs are basically very high level of skilled work is happening, research is happening, development work is happening, lot of IP, patented technology is being created in these GCCs, which are captive centers of large foreign companies, and there are GCCs of all manner. In fact, one of the largest hotel chains in the world, the Marriott, also has a GCC in India. So this is the second type of foreign investor. The third is the kind that the government of India wants to attract. In the semiconductor space, for example, or in defense joint ventures. In semiconductors, a lot of effort has been happening for several years now, but the size of a semiconductor investment, the size of the local economy, our linkages with China, China's lower cost production of various electronic components, there is a lot of mix. So the budget alone cannot be an instrument. Many other things have to come in place. So just that sort of long explanation to your question to reset expectations that the budget does not have a on off switch. Switch on kiya to aur paisa aaya, band kar diya to kam aaya. Of course that can happen for portfolio flows, the point that Shail and Sakshi made, because taxation of markets income is very, very crucial, and there you can see a much more rapid response. But FDI takes much, much longer. We have several other questions, and we've sort of short over time. I'm wondering what should we take up. Crypto taxation, there are a couple of questions. Rahul has asked, will there be any change in crypto taxation, 30% tax, 1% TDS? Utkarsh also sent us a question, is there any mention of legalizing or further regulating cryptocurrencies? And there are attached questions to this which says, will there be any special incentives for AI, fintech and deep tech startups in this budget? Who wants to take a shot at these questions? Shail, you want to give it a shot?
So, Siddharth, to be very honest, I am a crypto bear, and I have been proved wrong for the last 11 years or so. Both my children tell me that I have no idea about markets, and that is very well accepted. If we had bought Bitcoin 11 years ago, we would be in a very different space. Be that as it may, I don't think so there is any move by the government of India to legalize crypto, and that's there. What it can't do is have an economic meltdown somewhere which results in a political problem, which essentially means if Bitcoin halves and the government has a policy to sort of recognize it, then it has a problem, because essentially this is all thin air in every single cryptocurrency that you talk about.
Okay.
So they make money from you if you make profit from crypto trading. But they offer.
But there's one point, Shail, that I got to know just very recently, and this is after this imposition of this tax, India did not outrightly ban crypto, unlike China and unlike the United States of America, where crypto bulls are back in fashion, especially after President Trump winning. what has happened is that 97% of the entire trade has shifted offshore, outside of India.
Yes.
As a result, the government of India, the exchequer, has lost out in a major way on revenues. So I would say that you cannot stop the march of technology. You can build guardrails around it. And India is now caught in a very unique situation, frankly. On one hand, China, which has this policy of banning crypto, but it aggressively promotes TikTok and other social media platforms globally. On the other hand, you have United States and a new government there which is very, very bullish on crypto. It is for India now to take a call. Are we going to be in the China camp, so to say, when it comes to crypto, or will we tend and align with US policies in this regard? I think that's a bigger question. The fundamental promise of crypto, the underlying blockchain technology, is recognized by government. I think that's where the matter is stuck. That is why we have not done an outright ban, but we are not letting it live. I am reminded of that old Ajit dialogue from movies.
Liquid oxygen.
Liquid oxygen. Well, I think the crypto world is also in a similar situation. One final toss up very, very quickly in 30 seconds, and this is Prajakti, and I'm just putting that and other questions in one basket. What is the likely sectoral impact? Which sectors are likely to benefit from any possible budget announcement? Sakshi, to you first, and then Shail for closing. Quickly run through any sectors that we might be able to talk about.
Infra, that will be the first one. Now, with something that even Shail mentioned, that the capex outlay will be heightened, and the first sector that gets highlighted is the infra sector. You can look at the cement space, the roads and highways; those will be in focus. You're already seeing today how the buzz was there on L&T, which is the poster boy of infra. So this space will be in focus. Of course, there will be some announcements here and there on defense and on railways, like there always is. But I'm not expecting something massive, and therefore this is just a dead cat bounce when it comes to defense and railways. There needs to be some things clearly back in terms of rationalization of the valuations needs to be done on both these spaces, because they had run up quite ahead of their fundamentals as well. But infra story is going to be extremely important to see. We're going to be seeing FMCG, consumer durables in focus, because the boost to consumption is going to be pulling up these two sectors as well.
Siddharth, PLI. This will expand to newer sectors. It will deepen further. In the next 2 or 3 years, you will see Apple contributing more to the GDP of the country than many Indian corporates put together. So that's one. 2, railway. This is going to be a very, very big theme as far as markets are concerned, and of course expenditure on that. And finally, defense. So you might just see a lot of defense counters coming back into action after a massive correction that they have undergone in 2024. Leeway will increase, and of course I see a lot of overseas orders coming into domestic defense industry. I see a lot of partnerships happening. So defense is a 10-year theme, railway is a broader 5-6 year theme, and of course PLI. PLI will get bigger, better and deeper.
Ask BT's first edition in this year has just gotten over viewers. I think we have had a good time taking questions and trying to answer them to your satisfaction. What I want to leave you with the thought is, keep writing in and sending your questions, and we'll try and answer them. This time it was BT editors taking a shot at these questions, but we'll continue to get great market experts, economy experts to answer all your questions tomorrow and in the days, weeks and months ahead. With that, it's my pleasure to thank Shail Bhatnagar and Sakshi Batra for their time with us, and you, the viewer, for tuning in. We'll see you again. Until then, bye-bye.
to Delhi poll dangal has begun. From Yamuna to CM House to illegals. Battleground Delhi is